We are not hitting that 5,000 mark just yet on the S&P, but maybe we'll be able to break some news with our guest. Here I've got Michael Reinking. He is the senior market strategist here at NYSE. Michael, thanks for making time for us again here. We've been talking about how it's been kind of a meh week on the street, but what's going to be driving the market moves today?
Yeah, so thanks again for having me back on. Yeah, as you pointed out, we're kind of in a little bit of a void of economic data after the labor market data last week. We got the Fed speaking last week, and basically officials have kind of parroted that message throughout this week. So markets have gotten a little bit desensitized to that. This morning we got initial claims and continuing claims data, basically in line with expectations. We've seen that trending a little bit higher over the last few weeks, and given the amount of layoff announcements we've seen recently, we'd expect that to continue to move a bit higher. But it's a little bit of a quiet week. We do have potentially a big piece of economic data tomorrow as we have revisions to CPI, and then next week we look forward to retail sales and the inflation data.
Let me ask you about the layoffs question, because I'm curious whether that's indicative of a sickness within the labor market, or is it about cost cutting, everyone following Meta's year of efficiency that worked out so well for them?
Yeah. So I think it's a little bit of both, right? And you would expect to kind of see that. I don't think we're really seeing kind of numbers that are alarming in terms of the labor market, right? If you look at the labor market data we got on Friday, we had a very strong non-farm payrolls number, though there is some skepticism in terms of the kind of seasonality and some of the adjustments that we might see as we turn the year. But I think, what you just highlighted has really been kind of one of the key themes that we've seen kind of within earnings season this year, right? And that, companies are really kind of focusing on efficiency, right? Kind of doing some cost cutting. That way, if we do start to see a little bit of a slowdown, kind of within the economy, right, they're able to kind of offset that, right? And then there is the potential, some that builds in some operating leverage, right? If the economy does start to, something that we'd seen, kind of Meta's kind of 2 years ahead of the pack, on that front.
Another theme has been dividends. To what extent do you think the street is really excited about any company that's announcing more dividends to come this year?
Right. I think in terms of dividends, right, that is like a sign of that companies are comfortable, kind of with their earnings trajectory going forward, right. So it is a sign of confidence, kind of in the business model, right. We are starting to see, some of the capital return programs start to focus on dividends a little bit away, from some of the share buybacks that we've seen. Just this morning, our parent company here, Intercontinental Exchange announced a 7%, increase to our dividend, right. So that is something that we're seeing. And I think we'll continue to kind of see that, as we go forward.
And as we go forward, I'm fascinated by this idea that the S&P is priced at 20 times earnings, but we're also expecting so many rate cuts. Those two things just don't quite add up to me. Where do you see a catalyst coming for more growth moving forward?
Right. So I think we just kind of touched on that a little bit, right? So the two themes, within earnings season, we just talked about kind of cost cutting, and then the other side is just kind of the strength in kind of earning and technology earnings, right, and the growth rates that we've seen, in that industry, right. So that's kind of the bifurcation, that we've seen kind of within equity market performance, right, in terms of those tech stocks really leading. That's also kind of skewing kind of the valuation metrics, right, as those companies which are having really significant growth rates on a go-forward basis, right, are trading at much higher multiples. Now this the thing that drives that growth, we just kind of talked about in terms of kind of that cost cutting, right, and that operating leverage that companies will have, as they sort of kind of draw some costs out of the business. And when we do see the business cycle start to improve, right, that earnings trajectory can really pick up.
Right, continuing to cost cut moving forward and hoping for continued demand as well. Michael, thank you so much for your time. We really appreciate it. I don't think we've hit the record, guys. I'm going to let you guys check because you've got the numbers in front of you here. So back to you, Brad and Shauna, to hopefully break that news at some point today.
Yeah, hopefully. It's a note for right now, though. Thanks so much for joining us, Maddie. We appreciate it. Plus, Michael Reinking, who is the NYSE Senior Market Strategist.